This is Edible Economics, bringing you the important topics of our times as we turn noisy headlines into bite-sized issues you can actually digest. This program is for information only, not investment advice. Here's Andrew Tang.
Hello, everybody. Welcome to another episode of Edible Economics. And today we're talking about prediction markets. Yes, prediction markets. Now, you probably have known the two major ones, access in the U.S. Polymarket is probably the 800-pound gorilla. Even though Polymarket made it that U.S. citizens are not allowed to trade on it, okay? And then Kalshi. Kalshi is another platform of prediction market that is taking over the U.S. by storm. And I'm not sure if Kalshi is going public or not. I will do a little bit more research on that. Now, with us today to discuss this topic, and I'm sure we're going to probably turn it into a multi-episode segment, is Michelle Connell. Michelle Connell, welcome to Edible Economics. I'm really looking forward to today's conversation, but let me do a decent introduction. For those of you just tuning in, Michelle Connell is the founder and the chief investment officer of Portia Capital Management that is based in Texas. So if you're in the area, please look her up. I'll also have her information on the screen at the end of the show. She's also a CFA, so chartered financial analyst with more than 20 years experience across technology, investing, portfolio management, private equity, hedge funds, real estate, and alternative investments. Now, what I really appreciate about Michelle's background is not just about Wall Street experience. Her story is one of the resilience and determination. She worked her way through school, built a career from the ground up, and eventually launched her own firm focused on personalized investment advice and long-term client relationships. She's also became a familiar voice across multiple media channels and outlets, and she shared her insights on markets, small cap, alternative, and the economy across the different platforms. So Michelle, it's great to have you here to join us. Welcome.
Thank you, Andrew, for having me. And that was a very, very nice introduction. Thanks.
Well, I mean, we have to give credit where the credit's due. And I want to just break down this really interesting topic. I'm just getting more and more interest on this and question on this as well. Again, about prediction markets. I'm going to divide it into three topics. One is that prediction markets has no room for misinformation. It's probably one of the most profound idea that I come across. The second topic is Wall Street is starting to trade probabilities. And then thirdly, in closing, we'll talk a little bit about the prediction market's gold rush, right? Who's coming into this space? So to get started, Michelle, one thing that stands out to me is that the prediction market financially punishes misinformation. People can say anything online, but in prediction markets, bad information can literally cost participation money. And I don't gamble. I use prediction markets to help me with my research. So what's your take, Michelle?
It would be very similar to yours. I've never been a gambler. I consider what we do for a living educated gambling to a degree, right? We're taking the odds or the probabilities on how much we could potentially make on an investment and how much we could lose. So I guess to some degree, that's some speculation, but it's educated. So the prediction markets give us another layer as investors of information. And you're right, things will get shaken out eventually in terms of misinformation, especially when you look at the majority of the impact right now is with the institutional side taking advantage of this. So they're going to move on it really quick. And you're going to see things sifted out very fast the more that they use it.
Okay, great. Now, let's talk about mainstream media, okay, or the news outlets out there. Now, I keep in mind, I have to remind the audience that mainstream media, news channel outlets, they are still a paid business, okay? And they're paid by advertisers. So there really exists a conflict of interest, right? So your largest advertisers who pay your bills, you are very unlikely to say bad things about them, right? So in this case, among prediction markets, there is really no room for misinformation. And that's why. So, Michelle, do you think prediction markets can eventually become more trusted than traditional media narratives or polling data?
It's an interesting question as we enter in the midterm season, right? It'll
Yes,
be
absolutely.
interesting to see
Yeah.
how much straight information we receive off the bat, right? Because we've had so many recent years of the polls being wrong. Even most recently in the most recent presidential election, we're going to know more information faster, and it's going to be dead on.
Yeah, I agree. And I also want to share with the audience is that when I am working on a problem or when I'm researching a topic, I often use any source of information to basically to understand both sides of the story, right? And then with the arrival of prediction market, it just gives me that extra resource that I can tap into to concur the theory or disprove it, for example. And I find that very helpful. And again, I spoke with with you earlier about in the old days with first call, having a really expensive toll gate to access research reports. Now, I mean, in today's time, the flow of information is readily available. Research is mostly free. And with the addition of prediction market, it really strengthened our ammo, our resources to help deliver the most accurate information. And I think that's really fantastic, from that point of view. Now, the bad thing is gambling. I have two young boys, 17 and 15-year-old, and I'm sure they're exposed to this as well. And I need to talk to them about gambling because they think that they can make money on this. And that seems to be a problem. What's your take?
Recently, I've had several, up until the pandemic, I taught at University of Texas, Dallas. I taught corporate finance and helped them run the mutual fund. And I've had some of the young men reaching out to me talking about, the tech stocks, the semiconductors, using the covered calls and the derivatives twice, times, three times, etc. Also looking at these apps, these prediction apps, as a way of enhancing what they make. And from what I read today, you're having the average male who uses these apps go from twice a week to 9 times a week. So, we had talked a little bit about it's almost like when I'm sure to some degree, like when we're using any app, right? You want to use it more and more. In the past, it's been Instagram, it's been X, but now you're moving to something where there's money involved, and nine times a week, Andrew, that's a lot. And the average retail client that's using the call sheet or the polling market is 18 to 35.
Yeah, that's it's very concerning. It's
Yeah.
very concerning. Yeah.
Yeah.
And addiction itself, it's a very difficult topic for us to get to, because I always find myself having be in a difficult situation to talk about, hey, I think you're addicted to watching short form videos. And that's why, you're not getting the
Sure.
proper sleep, or that's why you're so short on attention. You can't even sit down and watch a full length movie with me, things like that. We're not going to get in there right now. So we'll segue into the second topic, and that is Wall Street is starting to trade probabilities right now. Okay, so it feels like we're moving beyond trading stocks and bonds, and now markets are increasingly trading probabilities themselves. So, Michelle, what kind of topic do you see that these platforms are most popular trading?
Well, it's a nice way potentially to enhance your returns if you're a hedge fund, right? If you just want to move in and out of a probability, and it also gives you a wider pool of potential investments. Maybe you don't have to do as much research because that prediction market app is doing a lot of it for you. The majority of the volume already is institutional, even though if you look at the actual numbers of users, the number of users is retail. But if you look at the trading volume, it's already institutional. So it's already being used.
Yeah. Yeah. The discussion topics or the things that you can bet on ranges, outside of sports, ranges, for example, recession odds, Federal Reserve, when is the Fed going to lower rates or raise rates? What are the expectations? Election forecasting that, just like what you talked about, and also geopolitical risk. And I think recently we heard from the news that some government officials or soldiers, right? They got arrested because they were
Yes.
betting on Maduro's capture in
Yes.
Venezuela, right? So
Yeah.
they got in trouble
Yeah.
to that with that.
Yeah. I hope the screening, and I'm sure I'm not alone, I hope the screening that prevents insider trading is adequate. I'm sure it's going to have to be added to as time goes on, as these platforms become more sophisticated. Because I think Wall Street Journal had one article in terms of there was just one particular soldier that had benefited $400,000.
Yeah, that was it. That was the news item that I was referring to.
And that's that's a lot of money. That's very tempting to
It
someone.
is.
Soldiers don't get paid that much. And
No.
if you could look at maybe getting around the insider trading within a platform, I'm sure it's very tempting.
Yeah. And I think this really speaks to is how quickly the financial markets has evolved. I mean, who would have thought of 0-day options, right? Back in the days. I mean, a couple of new words, like for example, synthetics, right? I learned that from my sister actually. She works at Goldman Sachs, and synthetics is basically journaling a book entry of a stock position that you would have held, but instead the custodian or the counterparty here becomes the bookie. So we just, we'll credit you, the equivalent value of that position, but you don't necessarily own it. So that is, those are the synthetics. And so that is one conclusion that we can draw, is that the financial markets, the mechanics of it, it's ever changing and it's ever evolving. Yeah.
Very true. And a lot of these institutions will have to determine if it's worth it. How much revenue are they giving up if they don't do this? They don't participate.
And that is so true. So peer pressure, competition, fear
Mhm.
of missing out. These are
Mhm.
all factors that are come into play when it comes to product offering. So if the neighbor down the road offers it, why wouldn't you offer it? So I think that really speaks true among the giants of custodians and providers out there. And that really segue into our third topic, which is the prediction market gold rush, right? So Kaushi's valuation is reportedly exploding higher. Robinhood and Coinbase are entering into the space, and sports books are watching closely. And this feels like, maybe MGM, even though they are already a gambling platform. So it seems like these are the early days of online brokerage platforms all over again. What do you think?
I think there's a lot of truth to that. And I think that's also why you have the cowboys, for lack of better terms, like the Robin Hoods, that are willing to go into this arena because their average client is the same age, same gender, same mindset. A young man that's 18 to 35, that's more risk oriented. That's perfect for Robinhood to expand their business. They've already got a captive audience. They just add that to their app. Why not? More revenue.
Yeah, it's true. I think one thing we do really need to focus on is regulatory guidelines here. I think the sooner we hear from the authorities to come up with some uniform regulatory guidelines, I think it will serve the public better. The SEC should be involved as well. And is this gambling versus financial instrument? No, there's lots of competition among different platforms. Again, think Kalshi, it's thinking about filing an IPO. Again, what are your final thoughts on prediction markets altogether, Michelle?
Cautious and interested at the same time. As an investor, I think it'll be an interesting layer when I'm looking at stocks or I'm looking at, economic conditions, pull out an app and say, okay, where are we in terms of the market belief, right? In terms of how's Nvidia going to report? Are they selling more AI chips? I'm sure that's within the apps information, as well as Federal Reserve, basic economics. It's always nice to have a way to double check your own analysis. And as you said, doesn't cost you any money.
Yeah. So in closing, if you haven't checked out prediction markets, go check it out. Polymarket, Cauchy, Kal, SHI, check it out. And also, I very much appreciate you, Michelle. I want the listeners and the audience to check out Michelle. And she's based in Texas. I'll have her information posted on the screen. And thank you very much for joining me. I will do more. Definitely will invite you to do a next one.
Thanks, Andrew. And
Thanks,
it was
everybody.
a very, very good topic.
Absolutely. And we will probably do another one if we come up with enough area of concern or subtopic. Definitely.
Great.
All right. See you in the next one.
Okay. Thanks.
The views expressed on Edible Economics are for informational purposes only and do not constitute an offer to buy or sell any securities. Market conditions can change without notice, and past performance is never a guarantee of future results. Investment involves risk, including the possible loss of principal. Andrew Tang and Turner Financial Group Incorporated do not provide tax, legal, or accounting advice. You should consult with your own professional advisors before making any financial decisions. Turner Financial Group is an SEC-registered investment advisor. For more information, please visit advisorinfo.sec.gov. Advisory services are only provided where properly licensed and under a formal client service agreement.